welcome everyone to the weekly town hall hosted on HR Tech Alliances. And it's great to see a lot of familiar faces, some new faces, some folks we haven't seen in a while. It's great to come back, and I'm excited to have this special guest today. It's kind of an encore, I guess, from the Q3 report that Alan gave us back in December, which I thought was fantastic and heard lots of great things about. So I'm pleased to announce he's returned with an update for Q4, which I guess would include the entire year. Would that be right?
Yes. Yeah, you're killing me.
I had to zoom in a little there. That's good. No, it's great.
All right, terrific. So, we do this every quarter, and so if you're interested in getting on the distribution list, I'm happy to add you. If there's people on your team that you want on the distribution list, happy to add them as well. Just shoot me a note and we'll make that happen. But we've been covering the HR tech industry for a number of years now and have been producing this report. And essentially what we want to do is to be able to provide folks with an update on the market, what's going on in the capital markets, what's going on in M&A and the financing world. And then a lot of our source stocks we put together in a recommended reading list so that you can just sort of click through to that stuff. Just the headline on Fairmount Partners, we're based in charming Radnor, Pennsylvania, outside of Philadelphia. There's about 25 of us. We're focused on technology, and I'm part of the technology practice, but we also cover healthcare services, consumer and industrial, and business services, which includes staffing. We do a lot of work in the staffing space. Within tech, we spend a lot of time in HR technology, and it's me in particular. I spend a lot of time here, and so we've done 290 transactions over the last 36 months. 52 of those have been over 100 million. There's about 30 of us working in the greater Philadelphia area. Most of what we do is sell side M&A, although we do some later stage growth equity and some buy side. So this is just my team diving into the market update. So on the publics, you see a big bifurcation between the large public companies and then the small to mid cap public companies. We group these guys based on revenue size as opposed to market focus, because a lot of the big guys are focusing on multiple sectors. But at any rate, you're seeing that there's a big premium for size. At December 31, the median revenue multiple, and again, we're tracking technology companies, we're using revenue multiples and not EBITDA multiples, 7.3 times for the large companies, 2.8 times for the mid caps. Interestingly, in Q3, the median multiple was 7.7 for large caps, but you had a pretty big decline in Paycom and Paylocity in particular as they missed their numbers, which impacted the overall multiples. In the public markets, still no IPOs. We're all anxiously waiting for the IPO window to reopen, because I know that there's several HR tech companies in particular that are waiting for that. But at this point, the IPO window is closed. That said,
wait a minute. Which ones do you think are waiting?
Let me come back to that.
Okay, fair enough.
So that sort of gives you a sense for what the public markets, where the public markets are. Public markets typically inform the M&A markets. So M&A multiples right now. So this is specifically for HR tech, but M&A, the median M&A multiples for HR tech were about 3.7 times. I will say, again, this is specific for HR tech. SaaS companies are trading for more than 3.7 times. So like a median SaaS company with decent growth is trading for, call it 5 times. So, not all HR tech companies have a recurring revenue model. And that I think has an impact on valuations. And we'll dig into that a little bit more later. In terms of the market update, one thing that I think is important to note, so we talk about public company multiples in Q4. I think in general, the public companies were up in Q4. Venture capital activity has been down. So 751 million invested compared to 805 in Q3. In general, it's a challenging capital raising environment. What we're seeing among the VCs is that many are focused on their existing portfolio companies, shoring up their existing portfolio companies, as opposed to investing in new opportunities. And also what we're seeing is that the new opportunities, investing in the new opportunities, the bar has risen in terms of what makes a really interesting opportunity and what folks are interested in investing in. So, from an early stage perspective, you've got to have very strong growth. You've got to have very strong unit economics. And if you're sort of a 20% grower or 10% grower and you're burning a bunch of money, it's really, really hard to get funded.
So that's more than just having AI in your press release. They've got to actually show some numbers, right?
Yes, it's more than just having AI in your press release. So let me see. We'll move on. So this is a market update. So current trends that we see going on. Again, AI. Everyone is trying to figure out how to leverage AI. You're seeing a lot of talk about AI. You're seeing a lot of people seeing a lot of adoption. Chat GPT. I think people are trying to figure out how to use it. But really, what's become interesting is that everyone always used to say, hey, we're trying to use AI. But hang on one second.
Mm-hmm.
Hang on one second.
You got it. Well, now's a good time to zing some questions up there. Actually, I need to look at the chat.
No questions.
No questions.
Sorry, that was a FedEx guy.
All right. Well, you could have brought him on camera,
Yeah, no, exactly. So AI, AI is a big trend. People are trying to figure out how to use AI. But again, they're trying to figure out how to use AI in a meaningful way that isn't just a buzzword, right? And so people are now getting smart to what is an AI company? What does that mean? What's the data? How is the data being trained? People are sort of peeling back on the onion on what does it mean to be an AI business and what does it mean to actually leverage AI. So that's something that we're seeing. Item number 2, so economic pressures driving shift in corporate priorities. So, it's been interesting to see where folks are spending money, right? And so employee retention in the middle of COVID was massive. So talent acquisition was massive, employee retention was massive. You'd see a lot around engagement and DEI. And over the last year or so, attention's really been more shifting to core, right? What's the core function, the need to have versus the nice to have? And it's things like, payroll, right? And again, when you look at where the investment has gone, the VC investment has gone, and the private equity investment has gone, it's really gone towards core HR, payroll, things like that, the needs to have versus the nice to have. The other thing I think that is worth mentioning, and I view this as sort of I don't know if it's a temporary thing or it's a product of the climate that we live in, but you're seeing a lot of backlash against DEI initiatives, right? And I think it's really political more than anything, because the data shows that DEI initiatives and companies that have diverse workforces are better performers, right? It's clear. And so, but you're seeing this political backlash against DEI in businesses and academia that I think is impacting potentially those groups that serve that space. But again, noting that it's an ROI generator for organizations. So that's something that's interesting. Return to office. You're starting to see a lot more of the big companies who are demanding this. That said, every emerging growth company that I meet has flexible work. And I think flexible work continues to be very attractive. So at the enterprise level, companies are continuing to force people back into the office because they think that there's greater productivity there, which may or may not be true. But emerging growth organizations are able to benefit from this because one, it's once the cat's out of the bag or the genie's out of the bottle, people don't want to go back to the office full time. And so you're seeing that those companies that offer hybrid work and as a way to thread the needle are more interesting and more exciting and it does a better job of sort of meeting the home life versus work life balance. And so I think that there's going to continue to be hybrid organizations, and then we also think that early stage companies and growth stage companies are going to benefit from that. Skills based hiring is another trend that we're seeing, and it provides a better fit. It provides greater retention. The other thing it does is it does open up when we're focused on skills and not resumes and where they went to school and things like that. It does a better job of diversifying workforces, right? So that's something that we continue to see. And then the big tech continues to lay people off, and this represents an opportunity for earlier stage companies, right? There's still a lot of talent out there. The double-edged sword is that it's really easy to hire these people, but it's also really easy for them to move on, and that's why creating culture and things like that is really important. But I think the tech layoffs continue to be an opportunity for emerging growth technology companies.
There's the data you track, like with layoffs. Do you also track like parachute, or early retirement type offers and things that I don't know if that's typically carved out?
It's tough. That's tough to track. Layoffs and headlines are really easy to track, but we do know that so this is anecdotal, but here's what we're seeing. So in a lot of these organizations, their first shot at reducing headcount was through attrition, was through normal attrition. Right. And not filling the jobs that people leave. So the idea is that people leave, we won't fill those spots, and we'll bring the size of our workforce down that way.
Yep.
The challenge has been that sort of given the economic environment, nobody's leaving. And so you're not having this normal attrition that companies have expected. And that's one of the reasons why you're seeing the layoffs, is because the attrition that they had been anticipating hasn't happened, because I think people are scared to be out in the workplace looking for a new job, or scared to be the last person in an organization.
Yeah. Well, I just see people that get the early packages. Some of them I see are starting up, new companies, right? And they have some money, they have knowledge, they have connections, all the good materials, and now time, if they take an early retirement or something package. That's something to look out for those who are looking for angel investors.
Right.
Catching them in that window before they decide exactly what they're going to do and with whom, right?
Right. That's right. Slide 10 just gives you a market landscape. This is how we think about the industry. So talent acquisition, talent management, human capital management, or core HR. Again, this is all the back office stuff. Top of funnel, branding, recruitment, marketing, sourcing, and then talent management. And what we try and stay up with all the logos. We've got a big database that's behind all this that has all these organizations. And it's a fun project for my team every quarter.
Wow. And those are a mix of public and private.
Yeah, it's a mix of public and private. We talk about sort of we do a little bit of information about each. These are the shows that we're attending. So we'll be at Transform. And if you're there, let us know. SIA, Executive Forum, SHRM Talent, Unleash, and SHRM, and then HR Tech in the fall. So this is really what I wanted to spend a little bit of time talking about. And so this is the current state of the equity market. So it's really interesting in 2022, just to sort of level set here. In 2022, the public SaaS markets, and we sort of look at public SaaS as sort of a barometer for emerging growth technology multiples. So the SaaS companies that we track at the beginning of 22 were trading for 15 times revenue, and that was down from Q3 in 2021, where they were higher than that. In 2022, by the end of 2022, SaaS multiples were trading at 5 times revenue. So the market had come off 2/3 in 2022. That had a big impact on the M&A environment. And so what you saw, again, you had this huge dislocation, and I think I probably got it in a couple of slides, but this huge dislocation in the public markets that, companies were trading for 20 times revenue. Now they're trading for 5 times revenue. So a lot of companies just pulled back and said, hey, we're not going to go to market now. So 23 was really slow in terms of M&A. What we saw, and again, the public markets being a leading indicator of the M&A markets, is that the equity markets ended 2003 really strong. So the S&P 500 was up 11% in Q4. The NASDAQ was up 13% in Q4. And for the year, it was up 43%. And why is that? Well, we're seeing concerns around interest rates and slowing economic growth subsiding. You're also seeing enthusiasm for AI word. The NASDAQ was up 40%. NVIDIA, so you look at the Magnificent Seven, NVIDIA was up huge because of the chips that they do, but the Magnificent Seven was up an average of 110%. And so, tech has made a huge rebound in Q4 and ended up very strongly for the year. And so what you'll start to see is where M&A multiples were depressed in 23, people are starting to price new deals based on the equity markets today. And so you'll start to see, I think, in deals that close, deals are being priced today, close and call it Q2, Q3, you're going to start to see some uplift in multiples. So in terms of what's going to happen in 24, I think you're going to start to see increased deal activity and increased multiples that continue to be fed by strong equity markets. Debt continues to be a challenge. So the debt markets are really tight. The debt markets will come back after everything else comes back. So, for companies that are out there looking for venture debt, it's still a little bit of a challenge. Rates are still really high. Lending requirements are challenging. So it's really getting debt today remains a challenge. And then in terms of the economic conditions, so inflation has begun to come down. Hiring has slowed, which is ultimately, look, what's the Fed trying to do by their increased interest rates? They're trying to slow hiring. They're trying to cool the economy, and it's having a positive effect. But it's really sort of a tale of two economies sometimes, because In Q4, spending was really strong. It was much stronger than expected. And so when spending is really strong, the Fed is disinclined to reduce interest rates. Well, jobs numbers have been strong, but January came out and spending was down. And so, you sort of look at all these factors that are happening in the market, what's going on with inflation. Their target, by the way, is 2%. So when you hear the inflation numbers come out every month, you want to think about it as how close are we getting to 2%? And we're starting to moderate there. Think about the jobs. Jobs are a sign of a higher economy. So I think we're marching slowly towards a Fed rate cut. It's we published this with the information that we have. We thought that in March the odds makers were saying it was a 50%. It was a 40% probability of a 25 basis point in March. That's now an 8% probability. It looks more like June is when we'll start to see interest rates come out. And then the other thing that's worth noting is that the Fed continues to talk about, so that the Fed is talking is that they're going to start to cut rates. The market's continuing to do well. The market was up again this past week. The markets are doing well. The Fed's talking about cutting rates. But it's important to know that there's still some recessionary indicators that are out there that are worth paying attention to. So one of them.
If I can interrupt a second and ask her that, I just saw the news that Japan is supposedly officially in a recession, and
Yes,
the UK is kind of acquiesced to recognizing the same thing. How does the global theater like that affect, let's say, North America market, which is, I imagine, what you're mostly tracking in terms of,
it's interesting. So it affects the U.S. in turn. So there's ways it affects the U.S. in terms of supply chain, in terms of international demand, things like that that's where you're seeing the impact of global economies on the U.S. But when you compare the U.S. economy to those international, I mean, we've done a really good job of battling inflation. But there's no doubt that we live in a global world, and a drying up of demand in parts of the world like Japan certainly can have an impact on demand for national companies.
Well, and you look at Indeed, who's based there, and the owners are certainly in Japan. I don't know if that's going to affect their M&A activity. I would think it would to some level, right? If their numbers are down too, of course, but finally admitting it. And anybody looking to sell to Indeed, which has been very acquisitive, right, in the past.
Right.
It's, have to look elsewhere maybe.
Right. Right. No, that's right. So again, the point that I wanted to make is there's still some recessionary indicators that are out there. And this one's really interesting, and no one's talking about this. So the US's M2 money supply it's seen the largest decline in 2023, the largest decline since the Great Depression. And I think M2 is easy access capital. So it's seen the largest decline since the Great Depression. Anytime that the M2 has dropped like that, you've had a recession. So that's a recessionary indicator. The yield curve remains inverted. An inverted yield curve has preceded every recession since 1969. But, so that stuff is out there, but at the same time, the Fed keeps talking about cutting interest rates. And eventually, short-term rates are going to, assuming that happens, short-term rates will be falling, long-term rates will be rising, and so the yield curve will sort itself out. So, it's just, again, something to watch. This gives you a sense for where multiples are. And these are the companies that we track: the large cap companies, mid cap companies, and this is really interesting. So these are the public stock indices, and how they performed. And again, you see Q4, things have really come roaring back
Yeah.
as as confidence has improved in the economy, and multiples have started to come back. Now we got some more data here. We got information on who the most active buyers are, where multiples are, what drives value. And then this is interesting as well. You can see how the financing activity has happened over time. So, talent management, human capital management, and talent acquisition. And you can see the level of activity in the heyday of COVID, and it has very much come down since 2023.
So Alan, there's a question in the chat from Christoph asking, how do you see talent management perhaps different than talent intelligence, which is kind of the new phrase or buzzword for some of the analytics type players in the space, I would imagine?
Yeah, so thanks. Thanks for the question. We see talent intelligence as part of talent management, right? So if we see, I mean, the way we kind of segment it is, you got talent acquisition, which is all the stuff on the front end about bringing people on board. Talent management, again, high level, is everything that we're doing to manage that employee base and the care and feeding of the employee base. And then human capital management, and I always want to call it core, but my team tells me that it's broader than just core in terms of what we're tracking, is all the back office stuff. So, I see talent management or talent intelligence using the data to, and it's an interesting area, and we're seeing a lot of activity there. It's how are we using data? How are we using data to inform? How are we using data to predict retention? How are we using data to determine who's going to be successful and who's not? Who's gonna churn and who's not? Who's going to progress and who's not? So, we see talent intelligence as part of the talent management sector.
Alan, can I ask another question for that?
Sure.
Last week we had Josh in the discussion, and he saw talent intelligence for companies such like Phenom People, Beamery, or whatever. So that is not only the internal look into your employees, but
right.
It's also running a really great career site, know exactly from data what's going on over there, and then organizing your talent acquisition part on your own. And what he said is the bigger companies will be so capable and knowing how to organize a talent acquisition that they can do that on their own because they have the data for that, and they know exactly where to go with channel. And the smaller companies don't have the capability. They need job board, they need other channels to fill positions. And that was a question I asked for. How do you see talent management as a old style and maybe only internal, and the new buzzword, talent intelligence, growing in the market and taking over career sites from ATSs, because ATSs are not able to run that part, because ATSs are always focused on internal processes, but they don't have any clue about how to reach people.
No, that's interesting. It is interesting, and I agree with what you're saying. There's a company that the channels that people use for talent acquisition have not changed, right? It's job boards, it's Indeed, things of that nature.
Maybe Stepstone.
Right, exactly. And so you've got all these legacy pools, if you will, of jobs and of postings and things like that. Yet Google had tried to get into it. Google just decided that it's not for them. They got out. And so we're seeing, there's a company called JobSwipe, which is interesting. And they're running analytics on people's the job postings and the boards that they use and things like that to try and figure out which channels are higher yielding, where the cost per, and people are changing the way that people that they pay for or think about job boards and talent acquisition. Instead of CPC, they're starting to think about cost per hire and how do you measure that, right? So I think to your point, you're starting to say people understand that there's a lot more data out there. There's predictive capabilities that figure out, people are measuring things that they didn't used to measure before. What are the channels that are giving me the best candidates? What are the channels that are giving me the candidates that don't churn, that retain the longest? And so, yeah, I think you'll continue to see people. How do we take a function that has existed forever, make it more effective, more cost effective, and more productive in terms of being successful and hiring the right people than we have in the past? And I think data is a huge driver of that. And I think the ability to leverage data, large language models, will also have a big impact on that as well.
Well,
Thank you very much.
hopefully it helps give some perspective on the market, and no doubt all that's going to help drive valuations depending on which companies calling themselves talent intelligence, internal, external,
Right.
whatnot, and what they get for it when they sell, like real estate. It'll kind of set the market based on transactions. So, Alan, we're a little over time, but this is great. We have as much time as people have questions. I'm happy to keep it.
And then I owed you my IPO prediction list. I don't, I think the ones that we see going public, and again, so the markets are starting to set themselves up for IPOs. When you're starting to see stronger performance in the market. But I think it's sort of the unicorns that are out there that a lot of people are talking about, like Rippling and Gusto and Deal, as potential IPO candidates. And it would be great, because I think a strong IPO market is good for the publics, and it's also good for the private companies out there as well.
Anybody else want to venture? I put it in the chat, but nobody's there's no money on the line here, really, but it'd be fun to guess. I mean, ISOM's been talking about it forever, right? But I don't know. Some of the, Alan, you haven't made it to all the town halls, but some of them, we looked at the press releases and, bringing in CFOs and whatnot.
Yeah.
It tends to be an indicator, but certainly there's a lot more factors that you track. But
you're right. I mean, so when people hire a CFO with public company experience, that's a very big indicator.
And if they hire your company, then
if they hire our company, then that's a different indicator.
Look for ADP or somebody else. Or so from that path, I mean, I think everybody who's on the call has a vested interest in the future of their company or their employer, where it ends up either being acquired by private equity or going public, or maybe VCs investing. Do you see a different path for the HR tech world compared to a lot of other industries, such as it's angel or seed, and then VC, and then private equity is the common one, or to get to IPO? Is there a different path in HR tech that's, you don't see in other industries?
No, I mean, I don't think so. I mean, so ultimately what's driving the IPO market is venture investing, right? So venture investors are looking for a return. The way that they can get a return is two ways. They can get it through an IPO, or they can get it through a sale. So like any emerging growth sector, HR tech, the progression is company raises money or not. I mean, the nice thing about HR technology is that there's a lot of bootstrap companies that are $20 million ARR businesses out there, more so than we see in a lot of other industries. But ultimately, it's a path towards liquidity. Everything's a path towards liquidity. So you grow, you sell to a strategic, or you grow, you sell to a private equity if you're big enough. They may bolt on a couple of companies. And then this private equity journey can be, you're with a private equity company that maybe is a $300 million fund, and then you sell to one that's a 500 or a billion fund, and then you sell to another one. Then you sell to a strategic, or you go public. But it's all the path is basically the same. It's always about growth and liquidity, growth and liquidity, growth and liquidity.
Nice. Oh, I see some hands up. I'm sorry, guys, didn't see that. We'll start with our esteemed member first. Lloyd, what's your question?
Thanks for the presentation. I was interested in the skills-based hiring. It's a particular interest to me, but I didn't see that popping up, or couldn't lay that issue over the rest of the presentation. So where is that? What is that? What's going on there? Can you give me some more?
Yeah, I mean, we're seeing it as an area of focus. So I think so. What we're seeing. So we're seeing that in a couple of different ways, right? One is we're seeing M&A around skills-based hiring. So Skill Survey got acquired. We're seeing more interest in skills-based hiring in the venture community. It's more effective. It leads to longer retention. It leads to better hires. So it's an area that we think there's a lot of interest in. We think there's a lot of validity to the approach. We think it's a much more effective approach than some traditional hiring mechanisms. And so, I mean, it's within that context that we think about skills-based hiring. Basically,
are you talking about a methodology? Because I'm trying to map it over to functionality in software, or software as a service, where people are indicating what their skills are or desires, or anything that's functional in an application. Or is it a methodology you're talking about?
Yeah, so part of it's a methodology. Part of it is companies that are creating software platforms to help implement skills-based hiring. You see it a lot in assessments.
Okay. Yeah, I guess I'm thinking of like I had been spent some time in the travel nurse industry. And this is a while ago. This is getting back 20 years ago, and they did have skills checklists. But yeah, so I guess in a way it's been there, where a nurse would fill out, this is my level of proficiency, it's that and the other thing, and the skills checklists were different between if it was a ICU nurse versus an L&D nurse. So I guess that's been there, but I'm interested in taking that and making it actionable data in software.
Right.
So it still sounds like if someone's doing skills-based hiring, they're creating non-interchangeable skills lists, like the pieces of paper that were skills checklists for nurses 20 years ago.
They are. So they're doing it through identifying skills that are required, that are potentially required for a particular job. In tech, it's what are the platforms that you're experienced with, that type of thing. They're also using assessments to identify where people are strong in skills and weighing that. So then the methodology on top of that is weighing that against the needs of the organization and focusing on the skills component of the candidate more than, hey, I got a college degree from Duke.
Okay. Thank you.
Next question, Bob, if you may.
Thanks, Ward. Alan, thank you for this. One of my questions is around this growing area of I guess I'll put it into the responsible AI category, like AI governance platforms, observability, things like that. Literally multiple times a day, I come across another platform trying to do this. So I was curious, when I worked at a small research firm, we did add a category in the landscape that said, I forget what they called it, but the point is, there's things that HR should be concerned about, but then of course you have CIO, CTO, CDO all saying, well, HR, like, I understand there's compliance coming, there's regulations coming or whatever, but this is bigger than you.
Yes.
And I've got other GRC and other things around risk management and observability in my ML ops, whatever. So when we look at this soup to nuts and we look at where the risk exposure is or whatever, I guess I'm trying to correlate what is important for especially anything that impacts a human impacting decision, whether it's hiring, pay equity, potential layoff, whatever it is. What I was just curious about what your perspective was about that growing space, because it's blossoming faster than I can keep up with it, and I'm focused on it. So it's crazy.
Yeah. So it's interesting. So everyone recognizes there's a lot of concern about what AI can do. There's a lot of concern about what happens when you take decision making out of the hands of people. There's a lot of concerns about compliance. There's concerns about is AI, like hallucinations, right? The quality of the information that's coming out of AI. And I don't know that anybody, so everyone's concerned about it. Everyone knows it's out there. Everyone knows it's a potential area of risk, but I don't know that anyone has really their arms around how are we going to control it and leverage it and take the risks out of it. So I think I think people are just sort of, they're making it up as they go along.
Okay.
So does that affect the valuations or markets or what? I mean, what's the outcome of them faking it till they make it?
Well, so what affects valuations? So investors are concerned about growth. They're concerned about ROI. They're concerned about retention metrics, right? Investors are very metrics driven.
But not ethics. And ethics is not on the list.
Ethics isn't high on the list of things that investors are asking us about when we're talking to folks, except in the area of risk.
Okay.
Right.
Yeah.
So they're very focused on what's the fastest growing company that we can find that's generating a high ROI, that is viral, that is going to get. How am I going to get a 10x return? Everything that an investor cares about really can be boiled down to how do I get 10x cash on cash return? That's what they're focused on. But so they're focused on that. But at the same time, they are focused on risk mitigation, which is how am I going to avoid stepping on a landmine, or how am I going to avoid ending up on the front page of the Wall Street Journal? So folks are very much focused on that, and I think they try and mitigate risk as much as they can, and they think about that in terms of investment decisions. It's not going to impact valuation. Valuation is going to be impacted on growth. But if they feel like there's a lot of risk around what you're doing, that would impact a decision whether or not to invest at all. They're not going to price it in. It's going to be a go, no go decision. Am I comfortable with it? Am I not comfortable with it? Does that make sense?
Very helpful. And I think, with the larger ecosystems bringing in partners to fill these holes, that could add a lot of element of risk if they don't really know who those partners are, right? And I would think the investment companies need to know who they're part of. Who are their partners? Are they white labeling it with?
Oh yeah, absolutely.
That kind of thing, right?
Yeah. So if you're seeking investment, so venture companies investing in a technology company. They're gonna come in and they're gonna do detailed due diligence on the tech. They're gonna understand what the code base is. They're gonna understand what components are your components versus what components that you're licensing from other organizations. They're going to understand all of that. And that again will go into a risk assessment.
Related to that, to see if you hear this much. So like when Kronos a couple of years ago got hacked, and people's payrolls weren't being run and so forth, one of their competitors I talked to, I won't say who, last week, said that it was the best thing that ever happened for them because a lot of customers jumped ship and came to them. If you're like responsible AI, what Bob's asking about, if you're providing a solution in that, let's say back in when that happened with Kronos,
Mm-hmm.
you might end up going down with them or maybe not even noticed. So I'm just wondering if that the due diligence ends up more closely expecting not only what's within your framework, but is your framework within another one that might, like the Titanic, you might go down with the Titanic, or maybe, it'll help your valuation go up if you're white labeled by an SAP or something like that, right?
Right.
Does that often get included in
Yeah,
evaluations?
so it does. I mean, again, everything comes down to cash on cash return, but I think how's my, so how do you determine whether or not I'm going to get 10x on my revenue? It's well, is there a strong ecosystem around my product?
Mm-hmm.
Is there am I able to white label it and sell it to the SAPs of the world, right? And people like that model because it's hugely leverageable, right? If channel partners can be very, very strong, they're difficult to actuate, if you will, because you've got to figure out, okay, SAP is going to white label my product. How are the SAP salespeople incentivized to sell my product? Are they incentivized to sell my product? If they are, and it aligns with what they're selling today, then that can be very, very powerful. If they're not, then they're going to focus on where they get commissions, right? And so people and investors will look at your go-to-market, your go-to-market motion. Is it channel driven? Are there proof points? Is it enterprise sales? Are there proof points? So they're going to look at that, and scalability, the scalability of your go-to-market motion is really important. If you've got a channel strategy that is working, like, you're embedded in Workday and every time they sell something, you get sold as well, that's huge. But if it's a bolt-on that's got to be sold separately, people don't give that much credit. I don't know if I answered your question, but
very much so. And by the way, SAP pays their sales reps 100% of quota for partner solutions sold. Some are making their quota just on partner solutions. So it's a pretty sweet ride if you can get properly embedded and you can work the channel.
You got to get properly embedded. Yeah.
A lot of resources. Well, how would that affect, from a partnering standpoint, how would that affect the sale? I mean, assuming like
that's
those
a
white label
good question.
partners don't have
and Brad's had his hand up for a while. I want to make sure we get to.
Oh, I'm sorry. Yes.
Question.
Carry on.
But let me just answer that question. When you have a strong channel strategy, the Workday ecosystem, companies that have leveraged that ecosystem, Workday acquires them, and they pay big money for those companies, right? Like a Pecan, for instance. When you have a successful channel strategy, so let's say you've got a strong channel strategy with SAP.
Yep.
Well, if SAP is accounting for a meaningful portion of your revenue, that limits your ability to be sold to an SAP competitor, right? So there's if your channel strategy, it can create channel conflict. You just need to be aware of that. So when you're entering into a partnership with somebody, you got to think about, or taking money from a strategic, right? These are things that you need to think about, because you need to think about, okay, who do I think my highest and best use buyers are when I'm ready to sell this thing?
Right.
And by thinking about that, this is the universe of potential buyers. How does the relationships that I'm creating today potentially impact that group's interest is something that's important to take into consideration.
Very true.
But
Brad,
a lot of folks want to acquire really good partners. And so that's like a Workday.
yes. Yeah. Vendley was an outlier, right? When they got acquired, my goodness, what a multiple, if everybody's be so lucky, but that may be partly why the numbers are coming down this past year. But Brad, we have a few minutes left. Please jump in.
Oh, thank you. Appreciate it. This is all actually really good questions from everyone. And Alan, thank you so much for such a detailed presentation. And clearly, you know a thing or two of what you're doing.
Thank you.
I have my question is around when you're doing your assessments and when you are paying attention to all the data, what emphasis do you put on shifting legislation in domains outside the US, if you do, to factor global market share and when a product is being built, its applicability from a global standpoint? Because and maybe this is a deeper conversation for us to have off like one-on-one, but we have some significant data that is showing us a very significant shift globally on the world of work. And I'm saying it's a shift that I don't think anybody's seeing coming. I'm not trying to be a prophet here or a crystal ball thing here, but I'm just curious, how much emphasis do you put on that?
So there's a couple of places that's going to show up, right? So companies are going to do a total addressable market calculation, right? And so to the extent that plays into the TAM, people are going to focus on that. To the extent that it plays into your forward financial models, 3 years out, what does our revenue mix look like, and where's it coming from? So, you know, if what you're showing is a big wave that's coming, and you can show that, I'm going to mix metaphors here, you can show that you're skating to where the puck's going to be, then you'll get credit for that. Provided that you can convince them that the puck is going to be where you're skating to. And you've got the data that supports that.
Absolutely. Yeah. Okay. So they do take that, they do look at things globally. Okay. So
Absolutely. Again, right. So an investor's looking at, how do I make 10 times my return? Right. So in order to make 10 times your return, you've got to become a much more valuable organization in their 3 to 5 year investing time frame. Right. And it's going to mean I'm selling more products to my existing customers. I'm expanding my markets. I'm adding new products. Right. And if it's, hey, I've got a new product coming out that is specifically designed to address a global problem that no one is addressing today, that gets people excited.
We could certainly bottle this goodness for quite a long time here, but thank you, Alan, especially your time bringing it here to the weekly town hall. Really fantastic insights and really useful for, I think, everyone that came, and look forward to hearing more and seeing you at Transform as well. You'll be leading a panel, and we'll have some interesting discussions in the collaboration zone as the pre-event for those who are going to Transform. The tickets still available, and should be a really amazing event. So hope to see all of you there, or at least some of you. And until next week, have a good weekend, everyone. Great to see you.
Thanks, everybody.